Welcome back, everybody. Hopefully, you have all been doing well. This week was a no trade week for me. Didn't look at it Friday. Price action has just not been very well. I do want to, however, cover uh, 27th Feb's, the Friday. I do want to cover what happened there because uh, I wasn't sitting at my station working. I was out and about, so didn't take any trades. We did actually get a trade there, which like I said, I couldn't take that. I was out and about. While we coming into the day, we had this AM low, and we had a London high. And for the calendar of the 27th, we were looking at PPI 830. That was pretty much the calendar. We traded into this AM low. Obviously, we didn't get that closure with the move higher, so we had to wait. In the next candle, we did get that rejection and the close higher, which then means that 10 a.m. we can go in looking for longs. Just go back here. Here we go. So looking at a 5 minute 950, you got this order block sitting here, and so let's see here. Anything inside of this would be valid for a trade. Anything like this up to that would be valid for an entry. I do have to say that we had some really volatile price action, really big moves, trading lower, coming back in. So this pretty much would be your entry here. 950. Okay, 955. So you're gonna have to be looking at entering in this 950 at 10 a.m. You'd be coming in. You'd be looking at this low high, lower low. So you also have a breaker block sitting inside of this price action here. So there you can see we traded into that right there. So one last tap here before rally. So looking at this here, entry could be here, stop could be pretty much below this order block, below the breaker block. And then you'll be targeting 22% or 10 handles. And that's the trade done and dusted right there. So that pretty much is the model that I saw. After the fact, I saw this. We had this order block, the breaker block. You also got this inversion. So there's a couple of things in this area lining up, coming together, and playing out on this trade. But that would be the trade right there, the setup. It's not the cleanest, but the setup is present and it did play out. So a lot of this week, let's just get this thing up here. A lot of this week, and I didn't look at Friday's price action. We'll look at that now. Let's see. Monday. Yeah, Monday was a rally day. We just opened, we rallied. That was it. So we took out these highs, rallied, no rejection coming back in the range. It just rallied higher. I didn't obviously didn't trade this. It's at PM, basically PM session last. It's not even last hour because the model you would have to wait for this and then wait for this closure. You would go in there like at 4 o'clock. So market's already pretty much closed for the day. On Tuesday, what happened Tuesday here? See, we did get this. Okay, yeah. So Tuesday we did actually get a we got a play there because this was a London low. We But the problem here is, okay, this candle didn't close reject and close bullish. Only in the next, so I would have to wait for this candle to play out, and then I can start looking for setups right there. And then it's already a lunch, and it's pretty late. So by that time, I'm really not in front of the charts anymore. I mean, let's go ahead and look at this. 12. I mean, I probably would have been able to dish out a setup here. Would have been able to dish something up, but I just really wasn't in front of the charts. And if I was, I would have saw this massive rally, and I really wouldn't have liked to get in on that and, you know, feel like I'm chasing price at that point. So probably not really anything I would bother trading. I like to see the model come into play around 10 a.m. or 9 a.m. come into play, and then get that nice close, that rejection with the bullish closure, and I can go in on the next candle hunt for setups. Really like that coming to fruition around 10 a.m. Get that rejection, get the closure at 10, go drop down to a lower time frame, and then take the entry. And that's pretty much the setup. So really nothing on Tuesday that would be viable. Wednesday we had a same thing. We had a bullish day, a really massive rally. Again, we took out this high, didn't come back to the low, rallied higher. If you trade PM, not really anything there either for me. So just a day where pretty much I don't bother with anything. Didn't move after 10, so is what it is. It's a pass. Thursday, hold your horses. Thursday, Thursday, pretty much same thing. We had traded up higher. Again, only at 10 o'clock. So you would have had to wait for 10 to close and then come in at 11. And for me, that's late already. I'd like to see the setup come to fruition at 10. I just want to look. Let's just look at this on a lower time frame, because you see, you would have had to wait for like 10 to do its thing and then come in. This was a London high. Let's go in and look at this on a lower and see what happened here. What the play was. To see around 10, we trade up into that. So you would have to look. I would have to look at 11. So pretty much you're gonna get a breaker block. See, this was a beautiful setup. Really clean, beautiful. This would have been the one. I mean, all day long. If you know, I sit at the chart and I'm present, then all day long I'll execute on this. But unfortunately, it's just one of those things where I was present, but you know, I sit down for this amount of time, and if nothing presents itself, I close it off and I focus on other things. I mean, you're not going to be sitting here all day long hunting or forcing setups. If it doesn't present, you come back the next day. So this is a beautiful setup here. Let's see here. We got that. So 11 o'clock. So this, you would come in as soon as this candle starts trading lower. Ideally, the stop here, I would place it above this. We have two fair value gaps. Breaker block. So ideally up here, but the stop is going to be too big. So what's the stop there? 21. It's too big. It's just not something I would be able, following my risk. I wouldn't be able to do that unless I came in, dropped down, saw this, and before it rallies down away, keeping in mind that it is above the 50% of this range here, which you would want to wait until it does trade below this at least, and preferably get a closure below that because it could just reverse before the candle closes and be bullish. And then I would be able to place a stop like 12, 13, 14. Yeah, this would I would be able to do that. 16%. I'll be able to take that. Just barely, but I'll be able to take that. But I would have to act very quick. I don't think. Okay, well, am I gonna be able to go back here so we can look at this on a 1 minute? Hope that we can actually, because it would be nice to see price action there on a one. Oh yeah. So 11. So coming in, see, I don't like this. I would probably take something at 11:02 here on a 1 minute. It's messy structure, but beautiful on a five. So, I mean, if you are in a situation where, well, preferably I would want to see a trade below that 50%, that 50% of that breaker block. So dropping into a one, oh, dropping into a one, and then waiting for this candle to close to get that closure below 50%, and then taking an entry on the next candle. So that is something you could do. And then the stop still stays at a 5 minute. It still stays at that fair value gap high. Still stays at that candle. And then I just, we target the same 10 handles. But this is it just kind of is like an extra, like, let's see if it closes below the mean 50%. Just to be sure that, you're not going to take it and it's going to end up respecting, staying above this 50%. So when it does close below, that's confirmed. You can take an entry right there. As soon as it closes, you can take an entry. Bam. And then we just hold for. So this would have been the trade for me for pretty much for the week, but unfortunately, it just played out a bit too late, and I wasn't sat down at the screens, baby in it. So it's just one of those. I missed it, and it's just one of those things. It's gonna happen. You're gonna miss really good setups, and yeah. But we come back the next day knowing that it's gonna play out again. So that pretty much would have been the trade for the week. I mean, as far as what we got here, and it's already Thursday. That would have absolutely been it to me because it's beautiful, beautiful. It screams out. So this would have been it for me. 12. Yeah, I don't know why I put that there. Oh yeah, was I looking at this? Honestly, I don't really don't know. But anyway, that would have been the set for the week for me there. Okay, let's get back to present. Friday. What happened Friday? I didn't even bother looking at Friday. We had non-farm payroll. It's the first week of the new month. And NQ has been inside of a really, really, I can't even say it, really bad range for pretty much the whole Feb. So, there's that. The Friday we had non-farm payroll. After we had, I pretty much sat down Monday, Tuesday, Monday I sat down, Tuesday I sat down, Wednesday and Thursday. Didn't find anything. So I said, okay, you know what? First week of the new month, non-farm payroll. I'm not gonna bother. sitting down tomorrow. I'm gonna do something else with my time and take a long weekend. Okay, so I didn't bother messing with it. So let's see here. Hmm. Okay. All right. Seems like you maybe had something here. There's would have been a PM. Come on. Come on now. PM. PM low right there. You would have had this low. You would have had this one. Did it tag this? Just barely didn't tag that one. So pretty much it tagged this one. So this one and that one would have been on this. So this is a, uh, well, that's an AM. To me, it's closer to an to 8 a.m. So 8 a.m. So it's an AM low in my opinion. So I would have that on the charts. Let's see here. And pretty much only got these highs up here. So I probably would have like a high marked out. So let's have a look at this here. We traded very aggressively below this. Very aggressively. Didn't tag this low there, but this is not a swing low anyways. But it went traded through below this low. So now you would have to wait for price to come back above this high. Preferably above the high. You wouldn't want to be longing here because it did the rule says price needs to reject and close back inside back above the high if I'm looking for a long, or if I'm looking to short, then it needs to close back below the low. So as soon as this closes higher, there I can't go in there looking for for a long. So it looked like a setup, but we didn't close inside the range, which means I would have to wait for 10 a.m. to close back above here. Then I can long at 11. That's just how it is. We don't have any short-term lows right here that I could take a look at. I mean, technically, we have this. Let's zoom in here. See, so technically, this candle body has a lower. Oh, let's pull this thing up here. Where are you? Here. So let's see. We're looking at the opening price. So look up here. The open is 24,609, and this should be. You look at the closing of this. 24,5. Oh no, that's the low. 24,609. 24,6. So it's pretty much the same level. I wanted to say if the body here is lower than the body of that candle and I disregard the wick, I look at the body, then I would have said this body is higher than this body, and then we got this candle above here. So with the bodies being equal, I guess there wouldn't be anything wrong with taking the body and pulling that through and then saying, okay, we traded it one time, another time, and then we got the bullish close. Then we can go in hunting for a setup. But mm, I don't really like the fact that those bodies, if I got the lower body on this guy, all game, I would do it all day long. But with the bodies being at the same level, the wick being lower on this one, uh, not ideal, not ideal. Time of day would have been London on this one. So not something I like because of the bodies. But let's look at the setup. Let's look at the setup. Let's go down. Let's look at it. Let's see what price did right there. So 10 a.m. You would come down 10 o'clock. See, price action here was not great. Look at all this tomfoolery. So the only thing you really have here is an order block. I see the order block. And then what we call a uh, since this wick and this wick overlaps, and if you take mean threshold of those, right? Mean threshold of this, mean threshold of that wick. Okay, that we call an I fair value gap. Um, that's something ICT taught quite a while back. If you take this week and this week because they overlap, and you take the 50% of that week and 50% of this one, and you extend it, it acts like a fair value gap. It's an I fair value gap. Uh, so that's what I would have saw. Okay, because the order block didn't get. I mean, look at the price action, scrap. So I would expect a fair value gap in here, preferably, or an inversion. So we got this I fair value gap. And then pretty much 10, we traded up impulsively, come back down, and then didn't we? Yeah, we tapped. We barely missed it, but yeah, I mean this is close enough into it. Then on the next one we tap into it. But if we tap into it, you gotta get in. That's it. You gotta be in. So by then NFP would be passed because NFP came out at 8:30. So hold up, let me just check. Yeah, 8:30 NFP. So you're way past NFP, so it's safe to go in there, and if a setup presents, to take it. So you're pretty much, as soon as it's gonna tap this, you're gonna have to be in, get in around this area. And let's see for stop. For stop, you could just go below this. Just place it like there, below the level, and target your your 10 handles, and you got them right there. I do want to look at a 1 minute, but very messy price action here. On a 1 minute, okay, I guess on a 1 minute, you got this order block plus the fair value gap here, and then we tapped into this, and entries taken in here. Stop below the low. Stop here is safe. As you can see, the stop did go ended up being below this. You can use that same 5 minute level to get an entry here. Up to you, really. Just depends what you prefer. Usually, I would go down to a 1 if I really don't see any entry on a 5. Otherwise, I'm going to look for a entry pattern on a 5, and I'm just going to execute on a 5. So there's that. You get in, rallies, take profit would be hit. Like I said, I didn't bother looking at anything Friday, uh, just because of honestly how bad price action has been sitting inside of the range. But I guess there was a setup. But again, like I said, I really don't like the fact how those on the 1 hour, those, that technically what would be a low. I don't like the fact that those bodies were on the same price level. I would have liked to see that one body be lower. Then I would do it all day long. So that's the only thing that turns me off about this whole setup, would be that. But anyway, let's say we didn't get that, and we were gonna stick around for the 11 o'clock set, which already I can see this is absolute junk. The order block, I mean, Stop is gonna have to be mean threshold if I consider taking anything in there. So the order block would be the entry. Stop would have to be mean threshold because there's no way that I'm going to be able to pull off more. So I mean, this is already really pushing it. Look at that stop. So kind of kind of not the best. Kind of not the best. And then I would be targeting 22. But the big turn off here would be the stop is pretty big, so I gotta put it below mean threshold of the order block. Would have to snag the entry as it trades into this. Would have to get in, and then take profit would be hit. So in both scenarios, you did kind of get a trade. I would have preferred this play, but again, coming back to this, I really really don't like this. So it might just be something that I would most probably would have just said, okay, you know what, I don't like it. I'm just gonna take a pass on it. And yeah, it's just one of those things. One of those things. But hope that you guys have found some insight from this video. And until I see you in the next one, good luck and stay safe.